Steve Biggins is the chairman of Winsome. He joined, I don't know, a few months ago after a very storied and successful career at Core Lithium, which he founded, he told me, 11 years ago. And the last 7 was focused on lithium and bringing that project into production. It is now in production. And that stock went from 1 cent to as high as $2. It's now, I think, $94 and a 1.75 billion Aussie market cap. So I've often said, if you look at our scoreboard in the last 3 to 5 years, there have been a number of companies that have gone from 10, 20 million market cap to $1 billion unicorn status. And that is like, that doesn't happen in gold. It doesn't happen in copper. It doesn't happen in iron ore, coal. I mean, we've all been doing this for like a long time. So little lithium, this industry that has been so ignored and made fun of to some degree by traditional, mining folks, has been among the most successful places to invest money. If you're a retail, shareholder in particular, you've got to choose wisely. And Rodney and I are fortunate enough to be associated with a number of successes like Lithium Americas from the very beginning, Piedmont Lithium from the very beginning, and most recently, Winsome from the very beginning, but it's only just getting started at Winsome. And the lithium industry, in our opinion, is only just getting started. So Winsome is a client of RK Equities. So nothing you hear, as always, is financial advice. And we're not financial advisors, but Rodney and I have curated and put our name to only companies we believe have legitimate, real long-term potential. And we've been very privileged to have been approached by Chris Evans in, about a year and a half ago, pre-IPO for Winsome. We invested in the IPO and we brought a few investors into the IPO at 20 cents. The stock's been as high as $2.40. It's now, I think, about $1.30. So this is a good opportunity, to be examining the company if you missed that initial run. Stephen has a very big following in Australia, and Core has a very big, retail following. So all of the investors that have been along for the ride from 1 cent to $2, I think should be wondering why and thinking Steve could do a whole host of things with his credibility in Western Australia. He can go to Africa, he could do whatever, but he picked Winsome to join as chairman in a similar fashion that Pilbara Minerals, Ken Brinsden, chose Patriot. Both of these companies are in the same location in the James Bay region. So with all of that said, this is probably going to be 2/3 Stephen and maybe 1/3 Chris, just kind of giving an update. Steve, could you just tell us a bit more in detail about the Core story in your experience and any comments you have on the lithium market, tightness or not tightness, spodumene supply, short, medium, and long term? Any thoughts on pricing, of course, but, then what attracted you to Quebec, Canada? What attracted you to Winsome specifically?
Yeah, well, thanks, Howard, and thanks for the kind introduction. Perhaps if I just start about, so with my background, and I think sort of how, success was delivered for Core was really, there was sort of 6 or 7 years of dedication and blood, sweat and tears, really, and persistence in belief in the project and its significance to, contributing to the transition to, a net zero economy and the growth of EVs around the world. The key components of the project, was having a high quality lithium resource, understanding, the sort of the exploration techniques. I'm a geologist by background. I've spent 30 years in the mining industry, working around the globe, not just in Australia. 20 years leading ASX companies, and in some ways it was sort of a great grounding to when we recognised that we had a significant project, was building a great team of people that were determined to drive this project into production at Finnis because we knew it was valuable. And I think, outside of the team, we had some of the biggest, sort of industrial players in the globe courting us and wanting to be part of our business, which gave us that sort of external confidence about the project that we were aiming to deliver. And along the way, there was, years of experience in sort of building and financing, moving through the regulatory environment, feasibility process, the engineering, so the ups and downs and reading of equity market cycles, to be able to sort of, bring all of those things together in a successful way and bring, the project to market when the market needed it, bring the company and value up to, over $2 billion. And, through most of last year was probably one of the highest traded volume stocks on the ASX 200. So it was a great success story. And from my perspective, last year was the right time to say, look, my job here is done, and to sort of move on to the next exciting project. And that's where the opportunity came to join Winsome. And when I saw the invitation from Chris and his team to join Winsome, there was a range of other sort of companies and lithium projects around the globe that were sort of expressing interest in how I might be able to add value to them. But the attributes of the project that Winsome has in Quebec got my attention, and that's why I joined the company.
Just want to talk a little bit more about Core, which has offtake agreements with Yahua and Ganfeng, both of whom are Tesla suppliers. Presumably, Core's product is being converted into hydroxide and will end up in Tesla's. Core had an agreement, was negotiating an agreement with Tesla directly and walked away from that. I don't know if you can talk at all about anything non-sensitive about that, if you were involved in that, but we were drawing kind of like a straight line from November when you walked away to January when Tesla renegotiated their deal with Piedmont, to get variable pricing from, the North American lithium asset, so yeah, if you just talk about the offtakes, and then if you could talk just broadly about your views on the market, supply, demand, spodumene pricing, and what your sense is, what's happening today, and then in the medium and longer term.
Yeah, great. Well, probably the first thing I'd like to sort of start with is so pleased to see that the long-term relationship that I set up and established with the guys from Yahua over a number of years, and their early backing and confidence in us to deliver a project is now paying dividends. And I think the first shipment of concentrate from Finnis is heading off to Yahua in the next few weeks. So that's terrific. Alongside that, we Chris is experiencing this right now, is there are a whole bunch of global strategic partners that want to get access to offtake or access or strategic control of quality lithium assets around the globe. So there's a whole bunch of parties that that Chris is likely to be sort of dealing with in the future, and that's the process that we went through with Core. The other offtake we established with Core, which was with Ganfeng, who are arguably the largest lithium producer in the world by volume. And then, we spent a lot of time, negotiating, talking with a range of other parties in regards to offtake, all the way from converters through to car manufacturers, including Tesla. There was the grounds, sort of the groundwork to establish an offtake agreement with Tesla that was put in place. But as you said, that didn't get completed. I think the environment for completing sort of offtake that time in that really sort of exciting and rapidly moving sort of lithium pricing environment we've been in over the last 12 months would have made it challenging to sort of, I suppose, finalise that agreement in that environment.
Okay. Any thoughts on it's less frothy right now, so what's your sense of what's happening in the market now? Like Albemarle just put out their results in 15 minutes. They're going to have their conference call where their lithium market commentary, at least in their deck, was a bit more cautious than the commentary that we heard actually from Core, from Pilbara, from Mineral Resources, IGO, Allchem. Rodney and I have been scrutinizing, all of them in the past, week or so, and it generally the balance was like, and Livent in particular was substantially more upbeat. We're thinking, given that Albemarle wants to buy the Liontown, that maybe there's some negotiating tactic in their language.
I reckon, just to cut in there, Howard, is that I think the basics, the dynamic that will happen over the next couple of years is that wherever there's a dip, the strategics will buy it. Right? So if assets dip, if there's sort of difficulty in accessing equity, the strategics will jump in, and they'll be fighting and climbing all over themselves still to get access to quality assets. There's going to be dips in lithium pricing. There's, as we've seen, there's overpricing, price swings both in equity and the lithium commodity price, but the strategics will be there. The number of strategics trying to find an entry point and a strategic position within the lithium supply chain, and particularly in raw materials, is just going to mean that every dip there's going to be strategics jumping in to buy the assets and providing a floor on pricing.
So just, thanks for giving us that background on Core. So having enjoyed that success at Core, Stephen, were there any particular attributes, around Winsome that, convinced you that it was a great company to join?
Yeah, there was. I think sort of straight off the bat was, sort of key component there that sort of attracted me to the company, other than Chris's good looks, was that the project, it's going to have a globally significant resource that'll have economics around it, right? So from my perspective, the skill set and the learnings and the experiences that I had in building a lithium project, from discovery, development, feasibility, financing, and into production, they will be applicable and useful and valuable to Winsome. And really, I want to stay valuable to the next thing that I'm involved with. So all of that skill set, I'm looking to be able to sort of pass on and guide Chris and his team into the sort of the challenges and experiences and opportunities that are likely to face the company in developing an economic lithium resource, and put Chris in a great position to sort of and shareholders and stakeholders to sort of benefit from the work and the development of the project. That was the key one. I think that sort of secondary to that really is you've got access to green hydropower. So you've got a project that's likely to have a small sort of greenhouse footprint, large spodumene crystals that'll be amenable for DMS processing. First world, low risk, tier 1 mining jurisdiction. And that's I think, the world is understanding and still a bit slow, I think, in the understanding of, is that, it takes 8 to 10 years to build mining projects. That's not an easy task. And you can only do it in some jurisdictions. And there are reasons why the mining industry has had a very difficult time in building projects in Europe and other parts of the world because of the level of regulatory process and the difficulty in getting social license to build mining projects. So that's where Canada and Australia is sort of outstanding. We've seen in Chile recently, that with sort of moves on government for sort of taking ownership and development of the lithium industry. So you're going to put sort of either risk discount, or what I would suggest is going to happen is you're going to end up having a premium put on development lithium projects in Canada and Australia, because South America is risky. We don't need to talk about really the level of risk in Africa. Europe is a difficult place to develop mining projects. So that's and then probably lastly there is this sort of transition, if you like, an alignment of trade between nations, and the opportunity to develop a lithium project which is adjacent to growing downstream processing infrastructure in the US and North America, and potentially in Canada, and the car manufacturing industry in the US. So you've got your markets right next door. So I think there's a huge number of factors that sort of make both Winsome attractive for myself to get involved with, and for shareholders and the company and stakeholders in Canada.
Well, seeing as you touched on it, I'll jump to a slightly further down on my questioning is how would you compare the permitting process and challenges in Quebec versus, say, Western Australia or the Northern Territory?
Yeah, well, I think there are going to be similarities, and there are going to be sort of local sensitivities that we're going to and site and project specific. They're going to be site and project specific, and people and cultural specific in Quebec. But the key attributes which are going to be similar is setting up good infrastructure and people infrastructure for establishing social license and community engagement and environmental baselines for the project, so that we're delivering a project that the community wants and the community understands that we need. And then and what I talked about earlier was that the experience that we had, particularly in Core, was developing a new significant mine in the Northern Territory, and it was the first new significant mine for 15 years. So there was a lot of sort of groundwork that the company needed to do, the engagement in community level, government level, to sort of build the understanding around sort of the technical side of building a lithium project, but also sort of its benefits, both from a financial perspective, but benefits more broadly in contributing to this transition to net zero.
Okay, great. And then I think sometimes people tend to forget that Winsome has 5 separate project areas. Obviously, Adena and Canset are out front, but there are many others. How do you think that the company might evolve, or how might it manage those 5? Might it look at something along the lines of Sayona with different hubs, or how best to develop all of the opportunities?
Yeah, it's a really good question, and it's something that we're actively sort of contemplating and strategizing at the moment. Really, our key focus is on our core assets at Adena and Canset, and driving value out of those, driving those projects towards development and production. So, that's probably sort of like the highest priority we have as a business, and will be the value creators, the core value creators for Winsome. But we also recognise that there's huge opportunities with the network that Chris and his team have established in Canada to continue to grow the company and sort of build growth assets in Canada. So we see that as sort of like a parallel stream, if you like. And then we'll develop our strategy about how we sort of manage those additional assets over time. Chris, did you want to add to that?
Yeah, thanks, Stephen. I think there's probably 2 ways to look at those southern assets. One is they have slightly different attributes to the northern assets, in that they're a bit closer to infrastructure. Sorry, I should say a workforce. So Decelle and Mazarac, for example, are within an hour's drive of Rouen and Val d'Or, a major mining hub in Quebec. So they're somewhat easier to get teams on the ground. And then also, in addition to that, we think, well, one strategy is to, and this is the core reason we picked up these additional projects, and Cermak falls into this category as well. It's great to have a portfolio of projects at different stages in the company, so that if we fast forward 2 or 3 years as we're developing Canset and Adena, we've still got discovery potential at these other projects that are a couple of years behind. But given their location, Cermak sits 30 kilometres from Sayona's Moblan project. As I said, Decelle and Mazarac are very close to Rouen and Val d'Or, with known lithium discoveries all around them. There's a big strategic value there. So we're being approached by a lot of people to recognise strategic value out of that. And I think that's where what we're trying to decide at the moment, as Stephen alluded to. We've got a couple of different projects, and we've got a couple of different options to develop and gain maximum value for shareholders out of each of those. And I think we'll decide on those over the coming, probably this calendar year. That'll become clear while we shoot towards a maiden resource at Adena.
Okay, great. If I can move on, talking of strategic options, you guys, the company has increased its effective stake in Power Metals, I think, to around 10%. And just talk a little bit about the attraction of holding that stake, and if there are any synergies between the companies, and how does that look to evolve?
The obvious opportunity there is for additional lithium resources to bring those into the sort of the Winsome portfolio. That's the key driver there. But Chris, do you want to talk about the detail?
Yes, we like it for several reasons. First of all, again, the Case Lake project at Power Metals is only a 2-hour drive from Rouen. So it's in Eastern Ontario, just across the border. So it's very close geographically to essentially that mining base of Rouen, where many of our people are based, where they live. The jurisdictional diversification that it gives us, I think, is quite important. At a federal level, there's a real push to develop the lithium industry in Ontario. There's a number of projects there. They tend to be smaller in size, and in order to get a resource of significance, it's going to have to be a combination of various deposits that have been discovered so far. So we've definitely seen a push at the federal level to find more resources in Ontario. So that gives us access to more government support potentially. But then the asset itself, there's been 13,000 metres of drilling done over the last 5 or so years. And I think it was Moblan with their maiden resource had done around 13,000 metres of drilling. It's a significant amount. It was focused primarily on cesium. So it's a bit spotty in terms of lithium, but while looking for cesium, they continually kept hitting lithium. So we see a lot of synergies between our two companies, and particularly because as part of the deal we own all the offtake rights for lithium, cesium, tantalum from that project. And that's the lithium in particular. In fact, all of them are at a 5% discount to the quoted Asia Metals price. So as soon as there's a resource upon that, that's hugely valuable for us. And Power Metals they've just appointed a new VP of exploration, which they announced last week. They're rapidly mobilising to develop that resource. And as I said, we've got quite a bit of our workforce housed, or they live in Rouen and Val d'Or, which is a short distance away. So we're in the process of developing a cooperation agreement between the two companies to see how we can help them and jointly we can move forward and benefit from a resource.
Yeah, look, in Canada, 2 hours is around the corner.
Yeah, that's right. I drove 12 hours yesterday from Val d'Or up here to our site.
Going back to you, Stephen, just to get a couple more of your views on things. In terms of, Canada is moving fast. A lot of other, exploration's been focused on other metals, and now lithium's coming into focus. So it's been underexplored, and there seems to be plenty there. In terms of the Canada hard rock story, how do you see that playing out? Do you think that there are going to be lots of independents, or do you think there's going to be a consolidation down to just a few players, in country?
Yeah, I think it will likely be significantly affected by sort of access to equity capital. So if the smaller guys sort of moving in, picking up ground, are able to sort of continue to fund themselves, then you're likely to see those guys sort of stay independent for a while. But I think typically, what we're likely to see is, and we're always going to see sort of volatility in equity markets and sort of windows open and closing for access to equity, especially for the smaller guys. And that's really one of the sort of the key things that we're able to do with Winsome earlier in the year is to sort of build a really strong cash position for the company. And that was one of the key learnings really is about we've got a terrific project at Winsome. It will have economics around it. This gives us license to go and continue to move this project towards development and production. In some ways a little bit sort of without having to sort of really sort of dance the sort of the vagaries of equity markets every 3 months, but it puts us in a great position to drive value out of the portfolio. What the juniors will find and the small independents is that their ability to do that is going to be inconsistent. And I think, as I said, earlier is the need to find long-term genuine growth in supply of hard rock lithium is something that's going to play out over the next 2 decades. The strategics and the in some ways we would like to see ourselves as one of the more sort of meaningful players in James Bay. Will be there to pick up assets and to build portfolios and deliver significant lithium hard rock supply over time. So we'll see. In a sort of a short answer, whilst there's access to capital, the independents will peg ground, but in the medium term, we'll see consolidation. Both from sort of in the smaller end to sort of build scale, and then probably at the larger end, as projects move towards development and get de-risked. There's still only sort of a handful of meaningful hard rock lithium development projects around the globe, even less in tier 1 low risk mining jurisdictions. So when those projects move to a point of large resource or moving towards feasibility, the strategics will jump in. If they can't get access to offtake, they'll get access to ownership.
So just one last one from me for you is on that point, is how do you think we're going to see, the future for the Canadian hard rock miners? Are we going to see them look to do downstream and become integrated projects, or are they likely to sell spodumene concentrate into the US or Europe or elsewhere under IRA or friendly arrangements between countries? Do you think there's going to be more integration in Canada, or do you think independent just hard rock miners and selling the product is a business model to last?
Yeah, I would suggest the better business model is for sort of chemical production, at least chemical production in Canada, and sort of utilising the access to sort of hydropower. And I'm sure, and it's very likely, that the Quebec and Canadian government is likely to want to see that scenario, that sort of value add and sort of building of starting to move sort of downstream in regards to building out industry and technology within Canada. But that'll be alongside and in parallel to concentrate production and concentrate sales globally. And then there'll be this very sort of interesting dynamic between sort of Canadian production, hard rock production, and the US car manufacturing industry in the US. It's very interesting to see how that plays out and how fully integrated those guys want to be.
Interesting statistic there we heard last week in New York at a conference that was sponsored by the Quebec government called Mines to Gigawatts. I saw Howard there, but one of the key statistics was that over the next 10 years, by 2030, the US is going to need 700,000 tons of lithium hydroxide in order to meet all the car manufacturing demand. And that I just don't know where that's going to come from. I think your point's very valid there, Stephen. It's will almost certainly be into the North American supply chain, and even better if we can convert in Canada.
Yeah, it was great to see you, Chris, there. And that number that you cited, I've used a Piedmont Lithium slide that articulates that, just showing just in the U.S. all of the battery plants and the gigawatt hours announced. And we've been talking, I gave a presentation in Toronto at the Benchmark conference about this. One, lithium rush, but overall the North American lithium triangle, in contrast to the South American lithium triangle, which doesn't seem to be producing all that much. Like Argentina, hasn't really expanded for all these years of kind of talk, and Bolivia is nowhere. But Quebec, Ontario, where you are, as well as Carolina with Piedmont and Albemarle and their Kings Mountain, you have plain vanilla spodumene, in a similar way that you have Western Australia going to China. Here you have in this is the most logical, scalable, sustainable source, proven, compared to DLE, sediment, and again, just conventional brines, it seems like in what you said, Steve, Africa has risk. There's definitely going to be some supply there, and not every African country is the same. So we don't want to dismiss that. And some of it's going to China out of Zimbabwe now, but Europe is quite difficult. There's just a handful of projects, or less than a handful, that of scale. And so yeah, we're huge proponents of keeping it simple, stupid. Keeping it spodumene stupid is our new KISS mantra. And but the downstream, some will do it integrated, others will focus just on the spodumene, but you'll have a greater opportunity not just to ship it to China. You ship it to Tesla. Tesla needs spodumene at Corpus Christi, and Albemarle is building their mega flex plant. So anyway,
also, Howard, I think we're sitting in a good position in terms of timing. Although we're arguably at the forefront of lithium development in Quebec, there are those who are slightly ahead of us, like Nemaska. Livent stated its intention to build a conversion facility around Nemaska. Sayona's stated the same intent around their hub in La Corne. So those guys with a couple of years ahead of us will break some ground, I think. And while we're still at the forefront in a sense, I think there'll be a lot of lessons learned. And as we do our studies over the next couple of years, the pathway to conversion, or the barriers to conversion, if there are any, will become apparent. We'll be able to navigate those a little bit better.
Thanks for that. And absolutely, they're going to, I think Allchem will want to move downstream, but all of them are going to start selling spodumene first, right? There was actually a change in Livent's discourse. They said, oh, we're not going to sell spodumene, but even SQM and Wesfarmers have said, we're going to start the mine and sell spodumene for a period of time. So, and that's smart, right? It's hard to do a mine and a converter at the same time. But I think the fact that they're ahead of you, there's second mover advantage, in this market, not first mover, because you see what's happening. They're restarting Sayona, or restarting North American Lithium. That was failed twice, and Nemaska failed once. So it's all good. I think your timing was excellent. Rodney has a couple of other questions. I just want to ask one more, because I was just while you were talking, looking at charts of yourselves and Winsome's stock chart compared to Patriot Battery Metals, and like over a 6-month time frame, you're about equal in terms of share price performance, but like on a year-to-date basis, Patriot has significantly outperformed, or so that there's been, your stock was great up until kind of January. It's come in. We've just noticed, because it has traded in line with Patriot, like what was good for Patriot was good for Winsome for a period of time, and there's been a bit of a disconnect just in the past couple of weeks in regards to that. Do you have any sense for what's going on, and what might spur a change, or a catch up on Winsome's side?
My view is that Patriot started drilling almost a year ahead of us. Well, exactly a year ahead of us, I think. And they reached a point. Well, there were various milestones throughout that year, some of which we've already reached, but they're all related to when the market can perceive the size, what the market perceives as the size of their resource, I think. Given the delineation of the strike length we've currently shown, with the width and depth, the market can make assumptions on how large our resource is likely to be, given what we've currently found. I think clearly the market can see that because they've done more drilling, and Patriot, it has a larger resource so far. I think we will slowly gain over the coming, for the remainder of this year, as we move towards putting out a significant maiden resource. So, and some of that's timing as well. Arguably, Patriot did it at a great time. We've experienced a rough market, and I'd suggest some of our recent announcements haven't, just due to the market, have not gone as well as you might expect. If we look at the macro level over 18 months, I think we'll quickly pick up.
Yeah, I think it's probably, as you pointed out, Howard, that sort of Winsome Winsome sort of has outperformed at times, and you just sort of get this sort of sort of different sort of sequences in sort of the growth cycle and considering that we're still very much in the exploration stage, slightly different sort of sequencing for where we are in sort of exploration drilling between sort of exploration drilling and resource drilling. But I think we're both sort of headed in the same direction.
Right. I was thinking back to Core, like Core in lithium, this Pierre Lassonde, not lithium, just any mining company, this Pierre Lassonde chart, you have the exploration rise, and then you have the going into production rise, and in between, it's often just a flat period. And your story at Core was in that flat period for like a very long period of time. So like that rally into, as you were going into production in the past kind of 2 years, was very significant. But I'm just curious, are you still in touch with a lot of the shareholders at Core, Steve, and have you had any dialogue with them, or is there, as much as we're thinking that people should follow you into Winsome, over 7 years you had a lot of different shareholders, some may have been there long term, some may have just kind of come for that going into production rise, because there wasn't a big exploration uplift, or at least not that I recall, with Core.
Yeah, I think where the market sort of market external to us started to really give significant value to the project is when they could see that we were going to deliver an economic project, that there were going to be economics to the project, it was going to be feasible, and it was going to get in production, and that and with the lithium price where it was headed, it was going to be very profitable. I think we're going to, with Winsome, going to get to that point much quicker. Right? So I can see it as a geologist. We're going to have a very large resource. It's going to be globally significant. It's going to have economics around it very quickly. So, over the drilling that, and it's 3, and it's probably another drill rig, Chris, that you're bringing in. So 4 drill rigs with the sort of the work that we're doing up there. We're going to be bringing that sort of critical mass around the project where the market will see clearly the economics that we'll be able to drive out of this project will come much more quickly, and it will come rapidly, as we get sort of closer to that point towards the end of the year.
Okay, great. Rodney, you got 1 or 2 more others, and then we'll wrap it up.
Sure. So, Chris, for you, I guess touching on the main things, the March quarterly showed just over 50 million Aussie in cash. So I guess, the question is, how much drilling and project advancement can you do with that amount of money?
I think it gives us a good 12 to 18 months of being comfortable. It's pretty hard because we've got the 2 main areas of expenditure. I mean, Adina is the main area, but it can set also, and we're fluctuating between the number of drill rigs, and then now we're entering summer, northern summer, so we're about to have exploration teams on the ground. We're spending between $2 and $3 million a month is a good guide to be using for the next 12 months. So that for the rest of this year and into early next year, while we develop our maiden resource and put out our PEA, we're very comfortable for that. And I think that's what Stephen was talking about. That gives us a lot of advantages that we can push on with those 2 key activities. And in the meantime, fend off the many approaches that you would expect we're getting from strategics, and then decide what the best move is once we define that maiden resource and put a PEA out. And again, I think the PEA is going to show that second mover advantage that Howard talked about. We can learn a lot from Alchem at James Bay and Critical Elements. The permitting processes that they went through, I think we'll be able to highlight why it took them a relatively long time and what we can do to combat that, and focus on those 2 key elements, which every resource is about. It's about the size of the resource, and then the quickness to market.
Yeah, I mean, I guess it plays to Howard's conversation of the graph and getting maximum value when you produce a resource and a PEA. So that's probably the best time to start looking around for partners. Just in terms of quickness to market, there are obviously faster routes than others in terms of production flow sheets. As it stands, you know, with Adena and Canset being kind of the two flagship projects, are they likely to both be DMS only?
They've both got the possibility. From the metallurgical test work we've done so far, I mean, we've got 90% recovery from DMS at Canset. That's world class.
That's very high.
That's extremely high, and it'd be foolish to think that would translate directly into the real life in the field DMS. But nonetheless, that certainly indicates that it's a high possibility of DMS only. We got just over 70% recovery with DMS at Adena, and we're about to do some more met test work now. We've gathered the samples. We've got enough drilling for it to be representative. 70% speaks of if that can be optimized, then that and we can get near 70% from DMS, then yes, we can do DMS only. And I think that's what our studies will show over the next few years. I suspect there'll be a hybrid where to get to market very quickly, it could be DMS only to start with, and then there'll be a stockpiling of middling such that in the future we can increase our recoveries through flotation or optical sorting or other means that might make it, you know, a longer term more viable.
So just in conjunction with that, so DMS only is invariably a lot cheaper, and then if you can just give some color around the infrastructure that is at Canset and Adena, and then you couple that with the DMS only flow sheet, you know, in terms of capex costs, give some idea of what that's like, and because that has the makings of being a lot cheaper on a per ton production basis, and then also give everyone listening in a sense of the availability of skilled labor in that neck of the woods versus, say, Western Australia, which currently is facing quite severe shortages.
Yes. First of all, the infrastructure is fantastic, particularly Canset. The Trans-Tiger Highway, which is the main roughly east-west route that runs through the James Bay region, literally runs through our Canset claims. And that's high-grade outcrop we've currently discovered sits not 500 metres off the road. And the Hydro-Quebec power lines crisscross our claims as well. So there's great potential. I mean, Canset's perfect. Adena sits about 40-something kilometres off the Trans-Tiger to the south. We're in the process now of applying for the permits to build an all-weather road up to the Trans-Tiger, and that overlaps a road that's already planned from the provincial government that runs from the south near Shibugamu up to the Trans-Tiger. So we'll effectively be funding part of that, but we expect that all-weather road to be in place by next calendar year. There's also where that road will hit the Trans-Tiger, roughly 45 kilometres north of Adena. There's actually hydropower that's been brought down for the Mirage Lodge. So again, power not far away. So I think infrastructure-wise, they're both really well set up. There's no getting away from the fact that it's cold, very cold for a lot of the year. So all processing facilities will need to be undercover. They'll need to be in warehouses. And I think that'll add, I'd guess, 25-30% onto the capex compared to a stock standard West Australian project. But as you say, if it's DMS only, that no ball mill and no tailings dams, and the initial capex will come down considerably anyway. If I think back to Bald Hill, Tawana project, that was DMS only, and I think it was a while ago now. That was 2016-17, but I think the capex for that was about 80 million Australian.
Yeah, that sounds about right.
And the other key benefit for sort of mining capex is this: you've got outcropping ore from surface. So, if you're sort of thinking about sort of capex in regards to sort of mining capex for sort of establishing access to your ore body, then that's got to be sort of right at the last end.
We spoke to another issuer yesterday who is in the gold business, and they basically said that they switched to lithium because the bang for buck for the drill bit, right? Like to be able to map out a resource is so much better, right? Like you can actually have a very substantial competitive advantage in analysis, when you're finding something. I mean, Steve, you're nodding your head as a geologist. I'm sure you've done other things than lithium. that is the attraction to hard rock exploration in particular. That's why on the RK Equity scoreboard, you're seeing, you know, the creams rising to the top, right? And it's all hard rock. It's happening with Brazilian exploration plays following Sigma, and it's happening in Canada. And so anyway, with that, we're now here at nearly an hour. I'm going to cut it. Really appreciate all those listening in. So thanks again to everybody, and we'll see you online soon.
Thanks, Howard. Thanks, Rodney.